Hello.
Venkatachalam sir, good evening.
Good evening to you. I was wondering, no audio, so I can hear now. Hear the audio.
Okay.
Good sir, how are you?
With all your good wishes, God's grace, fine sir.
Good. Thank you so much.
Good evening.
Good evening to you.
Good evening.
We'll start in a couple of more minutes.
Yeah.
Good evening, Ms. Neha.
Yes, good evening, Saraswati. How are you doing? I'm so
doing good. Thank you. How about you?
good. I am just a couple of minutes late. I'm sorry for that.
No issues. We can start. Shall we? Shall
Yes,
we begin the thing? Okay, good. Thank you. Thank you very much, Neha. Thanks for joining. And I'm Saraswati, Secretary General, and I take great pleasure in welcoming Ms. Neha Kumar, the speaker for the day. She's heading the India Program Climate Bonds Initiative, CBI. The name could be misnomer. And I also take pleasure in welcoming General Committee members, Mr. Venkatachalam, advisor for the Sustainable Churning Forum, and all the participants for today. Some more to join. We had some glitches initially. I think people should be joining now.
Okay.
So anyway, without probably much ado, let us just begin the program. Just for the information of some of the new members and also for our guest. Madras Chamber is a 187-year-old chamber, Ms. Neha, oldest in southern India, second oldest in the country, probably next only to Bombay Chamber, which was born 1 week ahead of us rather. So, the chamber has got many expert committees, many new initiatives were taken up, especially during our 175th year. We rolled out some of the special initiatives, and our Sustainable Churning Forum is one such initiative. These programs are organized under that. And the underlying objective of our STF is creating a business case for sustainability, as I was mentioning to you during our conversation. And we have been having number of programs, and we also felt, with more and more awareness coming, it also requires more and more new concepts to be told to the business community, to others, education and awareness creation on these things are very important. So we started the Sustainability Speaks series a few months back, and this is the 5th in the row. And we covered topics like circularity, resilience, common space for sustainability, transport, and things like that. And especially when we say about business case, the question also comes, is sustainability affordable? Whether there are enough instruments to fund it? Is it becoming costlier or cheaper, or other factors like the demands from the market to be factored? All these things come. And also the question remains whether the people who are conventionally financing understand this and they can also cater to that, or we have to find new instruments. That is where I thought this topic was chosen for today. And I'm happy once again that you are here for this talk. So we will begin the talk. I'll just give a brief introduction of you for the benefit of the members, and we will just move ahead with the talk. And
Yes.
maybe towards the end, we can take some questions.
Sure, absolutely. Saraswati, if it is possible, just enable the sharing function for me so that I can.
Yeah, we can do that. You have a PPT, right?
Yeah.
My colleague would just give you the sharing right. So in the meanwhile, let me take the privilege of introducing Ms. Neha. She heads the India Program for Climate Bonds Initiative, as I already mentioned, which is based in Delhi. She drives policy practice, strategy, and partner programs to scale up the green bonds market and sustainable financial ecosystem. I feel that we cannot have a better person to address us on this topic today. She has served as a core member of the working group of taxonomy, which the Ministry of Finance, Government of India set up under the Sustainable Finance Task Force. That is interesting. Her current focus areas include the role of central banks, expansion of credible sustainable finance in hard to abate sectors, climate resilient agriculture, and state and city level action on green financing. Earlier, she steered and contributed on ESG disclosures regulation by the Indian market regulators, Securities SEBI, development of financial sector-led responsible financing guidelines by Indian Banks Association, and national voluntary guidelines by the Ministry of Corporate Affairs. I understand she was here earlier, many years back, to probably talk on this national voluntary guidelines. And I'm sure there are a lot of changes. We have traveled a bit in that now. And that's a good sign, I would say. She has over 17 years of experience working on these fields. And here I am presenting Ms. Neha Kumar to this elite audience.
Yes, thank you so much. And it's really a privilege to be here. Thank you for the invitation. I was telling Saraswati yesterday that I've always found the industry participants, the audience south of the Vindhyas, extremely interested, curious, and also prepared for such talks. So I hope that we'll have a good interaction and conversational chat today. I just wanted to check if you have enabled the share function.
Jaya, can you have the sharing rights?
Yes, you can share it now.
You can share. Try, please try.
Okay, I think I'm having a problem. So is it okay, because this is my absolutely brand new laptop, and this is the first Zoom call on which I'm sharing. Is it okay if I send you my presentation?
That
Yeah,
would be
please
good.
do, ma'am. Please do.
I think that'll be easier, right? So just
You can send it to Madras Chamber mail ID. Am I right, Vasu?
Yeah, ma'am. She can send to that.
Okay, we will try immediately.
I'm sorry for this, but I didn't check it earlier. You know, I thought, everything technology-wise should be okay. Okay, so let me just send it to you.
Sustainability is a complex topic always.
Yeah, just there is mails from. Please give me a moment. Yes, I've got it. And I'm going to send it over here. Attach. It has come. It is going to Madras Chamber.
Yeah, let me check, ma'am.
Yes, I think it's just going. Just hold on, please. MCCI, CCI. There we are. Yes, let me come to Zoom now. I mean, just to set a little bit of context, I was also, talking about it with Saraswati, and this morning I was at Indian Institute of Corporate Affairs, talking to some government officials from Ministry of Finance about this subject. And if you see the arc of evolution, then how we started talking to corporates around 15 years ago on sustainable practices, business practices, and how should be core to the business. The same sort of, conversation is now happening with the financial sector and how they incorporate sustainability into their operations, lending and investment, and why this is absolutely critical given the climate challenge that we have, given the environmental challenge that we have. And how not only is it a very, very big opportunity to finance our growth, which should in ideal scenario be green, right? I don't think that there is any other scenario or any other vision of growth that we should have, given also that green means that it leads to productive gains, it leads to frugal use of resources. It also, I mean, nothing is on autopilot, I mean, everything has to be sort of always looked at in the sense that the changes are going to happen, the transition is happening, some technologies are becoming obsolete. We know that our economy is, at least in terms of competitiveness of coal, that is receding. Renewable energies have, especially solar, have really taken over the market. So the economics of green is also getting strengthened quite fast. And of course, the question that you just raised, Saraswati, about, is it still a business case? Are there more costs attached to sustainable practice and also to sustainable finance? What does it mean? So what does credibility mean within the market? So if you have my PowerPoint, we can just start sharing it on screen. But I have basically structured my conversation into 3 parts. Just let's look at the landscape. What are the driving forces? Let's also look at the constraints. It's not easy, and access to finance has always been a problem. Now, is access to green finance an opportunity or still a problem? And then we should look at also what is happening in the policy world, how is the market growing, and why would it make sense to actually participate in that humongous opportunity that lies ahead of us. So a quick word on Climate Bonds Initiative. We can just move to the next. I was trying to move it. Yeah, if you can just move to the next one. So we are a global not-for-profit organization, and what we do in the field of sustainable finance is that we also set standards which are based on science, which are based with deep discussion both on technical side of it as well as industrial application side of it by the industry. And so we are a standard setting body. Our standards are globally recognized. Our certification is recognized. And we will come to the benefits of those kinds of things later on in the discussion. But we also track every labeled debt issuance. I think this time we were able to, we do a state of the global market report, then we also go region and country specific. And I think our global market report tracked around 22,000 bond issuances, which were labeled in one way or the other. Now we have also started tracking social and sustainability bonds, and I will tell you why. I mean, there is now, it's not only green bonds. I mean, this universe is also surging with various kinds of instruments. Then we also work very closely with ministries of finance, with central banks. Ultimately, the theory of change that we are trying to say is that you should have a large credible market. Credible is extremely important, and we will hold on to that idea throughout the conversation. And we should see that our focus till now has been on the bond markets for a simple reason that these this is where the big capital is available, and we need to shift big capital at scale, at pace, to be able to meet the climate challenge, to be able to plug the green investment gap, etc. But also it is not limited, sustainable finance is not limited to only one kind of instrument. You can apply this. You have to basically unleash every source of finance, green every source of finance. I will take this call. I'm expecting a call from the ministry. Just give me a moment. Just give me a moment. Yes. Yeah. So I was coming back to the thing that, every source of finance needs to be also greened, and bank financing, equity financing, bond markets, capital markets getting green. All of that is necessary just to be able to plug the trillions of dollars that we need in order to meet Paris targets and SDG targets. And why are they going to be important for business enterprises as well as for the financial sector? So there's a lot of policy engagement work we do, and we also do a lot of technical assistance in training and capacity building. And you can see that, in India, we have done empirical research. We have done research on exposure of the financial sector to fossil fuel and what does it mean for the stability of the financial sector. So many, that risks that sit in the financial sector is not insignificant. We have also been working on agriculture, resilient agriculture, and how that can be linked to, say, capital markets as well as other sources of financing. And we have done a whole lot of, we are a knowledge organization, so we keep on coming out with thought leadership efforts and many, many knowledge products. Could we move to the next slide, please? Yeah, let's move to the next. Move to the next. So I just thought that, like we go, and I'm sure everybody's tracking these kind of announcements, but it is good to drill some basics into. It's good to drill them home every time we say this. Now, this is 2016 emissions profile, and India is the third largest emitter, as I say, even though per capita emissions are low. But our energy sector and then our agriculture sector are the largest ones, and coming to road transport sector. Iron and steel, you see over here at 6%, but yesterday I was reading a Ministry of Steel thing on green steel, and they said that actually the global average of emissions in the iron and steel industry is around 8%, and ours is at 12%. So there was a Ministry of Steel paper saying that we need to decarbonize the steel industry at pace and scale. And all of this means that there will be not only technological advancements, investment into R&D, but like what happened in RE, expect also policy shifts, and you will see the announcements like hydrogen policy now, coming into shape. So everything is moving in the direction which is more green than less green, okay? And it is moving at a considerable pace. I mean, today, I think by evening or tomorrow, there will be a green bond framework for the sovereign issuance that the Ministry of Finance will release. So India will join the club of sovereign green issuers, and all of that is necessary to give the fillip to the green finance market, especially in the debt capital market, green bond market, and even to promote this as an asset class. Okay, so the mitigation, the emission side of the story is pretty straightforward. It keeps on getting told to us, and we keep on, of course, experiencing it in terms of heat, etc. But the adaptation side of the story is equally important, simply because of the reason that We are a country which lies in hotter zone. We are a relatively poor country. We have a huge chunk of our population which is dependent on agriculture, which is already locked into the impact of climate. So there is no way for us not to attend to adaptation challenges and not to mitigate that challenge also, and have more finance flow into those things. So mitigation definitely is the top agenda, also not because it is important and it is urgent, but also the industrial West would look at mitigation as the top agenda, but adaptation is no less important for us. That's the essence that I'm trying to make get clear to you. And our economy has been suffering in terms of percentage points of GDP loss almost every year, given the severity and the frequency of the disasters that we are facing, whether that's drought or that's floods. So I mean, one can keep on arguing and keep on denying that this is not because of climate change and this is just a cycle of this things like that, but it's not so. So there is enough science now which is telling us that if we do not accelerate our action, then the catastrophic impact of climate change will be irreversible. And that is how this 2050 net zero, which is the global watershed kind of year, that is what it says. I mean, it's a different matter that different countries are setting different years of net zero given where we are in our stage of development. But if you strictly go by the science of it, if you strictly go by the carbon budget available for countries to actually emit and absorb, then by 50 we should have actually be on a net zero thing. And it's here the net is important. It's not that emissions will come to zero. Every activity has emissions, but how much we emit is also how much we remove. Either we remove or we keep it under the ground. So the net should be zero to avoid the catastrophic impact. Could we move to the next slide, please? And when we see all of this, and you would come across all kinds of numbers, right? I mean, sometimes your mind boggles at which number is correct, which is the range that one should be looking at. So now this is something, the net zero, the 2070 target, and this is a study done by a think tank called Council on Energy, Environment and Water. They said we need $10 trillion to achieve net zero emissions by 2070. And this other number, 170 to 200 billion a year, is actually drawn from a much more conservative estimate that the government provides to you in terms of the climate target investment, around $2.3 trillion that we say till 2030. And that, if you just simply divide it by number of years, it comes to around $170 billion. And some other estimates says 200, so it's just a range. But you can see that we have a huge annual need of finance. And then we have, these other numbers are quite interesting. There is an organization called Climate Policy Initiative, which tracks the flow of green finance, which basically showed in the case of India that our annual investment into green, and green we will again come to. So what is green? Green, is it only renewable energy? Is it other sectors? And there is, of course, there is potential to green each and every economic sector. And that is where, having the correct definitions plays an extremely important role. But we are about a fourth short of our requirement, according to the latest study. And within that, adaptation flows is just 5 billion, right? I mean, this is just nothing. And where does this come from? This comes from sources like Global Climate Fund and banks like NABARD disburse it and things like that. So it's private finance is extremely low, especially in adaptation. The big guys are moving in the mitigation area. And Mamta is saying something. Yes, of course. So I'm not able to look at each comment, but when they beep, I will try to look at it, and we will try to attend some of these things at maybe together, or maybe we will just break in between so that, you know, one can attend to these questions and very, very useful remarks that are coming. So yeah, and then we can move to the next slide, please. So, like we were saying, and like just the remark that came up, that it is not very easy to identify the emissions flow through the process, but what the challenge in front of India is that not only does it have to ramp up in terms of power generation through RE, but equally it's industrial sectors, right? I mean, they have to also be, they have to make their processes green. Now, that swath, you know, and it's not only the industrial decarbonization or deep decarbonization, but it is agriculture, it is buildings, it is transport, it is all of that which needs to transition to net zero, to green. And so there is this urgency, the rapidity that is actually also involved in this process. And to some extent, in true Indian style, there is also haphazardness. But even though we don't have a Green Deal and we don't have a huge policy structure backing that thing, we have seen that after COVID, there have been many policy guidelines, whether that was for EV, whether that was for local manufacturing of solar modules, or whether that's hydrogen, etc. So I think in different ways, things are coming together, and like India always manages, somehow it is moving forward, and we will see that how it needs to actually accelerate that pace in a much more sort of a coordinated manner, if we were to really actually make the gains out of this transition. Okay, so transition can be very disorderly, and let's make no mistake that it will not be cheap either. So how do you make it orderly, and how do you get more finance to flow in this transition? How do you support your industry to be able to shift to better technologies, to better processes? So your investment in R&D, your collaborations, your international supply chains, everything needs to matter and needs to be looked at in a perhaps in a sector way, you know, in a multi-sectoral strategy. So right now, we are doing things, we have a 270 target, but we don't have multi-sector pathways which are very clear and defined. So we are doing something in some sectors, they're pushing ahead, some sectors are lagging behind. And hence, you know, this is going to cause us some problems, you know. So there's an acronym that I use, which is called OHIO, which is like own house in order. I think there is that need to put our own house in order, and one has to acknowledge that industry is leading on this and policy is catching up, but policy is extremely critical in doing so many things, not only sector-wide policy support, but also in terms of financial policy and regulation. We'll come to that a little bit later. So I talked to you about steel, cement, chemicals are all going to become important in terms of greening their processes, greening their scope 2, scope 3 emissions, etc. Some of you must be familiar with all of these things, but you know, if you're auditing your emissions at all already, and like I talked about agriculture, and you know, so all of this, and at the same time, I think the main thing that we are also trying to say is that it is an opportunity for industry, if you really look at it, but is it really an opportunity for people? And that is where private industry, in terms of ESG, in terms of what you're already doing, and how this transition really becomes sort of a just transition, which actually creates jobs, which actually improves the access to goods and services to people. So this is in a way, if I might say, if you like, this is a second chance at prosperity. So green economy globally is standard around $7 trillion USD worth. It is concentrated largely in US and Europe and China. The rest of the world is catching up, okay? And it makes huge sense simply because it is increasing. And in size, it is actually right now equivalent to the fossil fuel economy, okay? Now, let's move to the next slide, please. Just a little conceptual boundary over here. We use these terms very interchangeably: green finance, sustainable finance. So sustainable is when green and social and the governance aspect go together. Green is very much environmental and climate. Okay, climate is still a small part of small but extremely significant part of green, because green can be broader, right? Let's just go to the next slide, please. There are some things that we don't need to spend too much time on. This is something that you might have heard from across, but this is now like a big mela, right, of all kinds of bonds. And I'm concentrating on the bond market right now. We can talk about bank lending, etc. also, if anybody's interested. But this is important simply because I told you that this is where the deep pockets lie. This is where the institutional investors are. International investors are chasing these projects, but they want to put their money because they are either mandated by regulation, or they're creating those portfolios, green portfolios within their companies, that they want to know that if the money that I'm putting in, whether that will go to as transparently and credibly to a credible green project. Now, like we said, you see these concentric circles over here. So there is climate finance, and then you have green bonds, okay? Then you have green loans also. Like I said, it is not restricted to bonds. There is green loans. Green loans are generally a transaction between a borrower and a lender, but it is very much, something which is limited, generally smaller in size. And so this is just a way to see how this universal set of sustainable finance, what all does it have, Then you have pandemic bonds, social bonds, SDG bonds. A lot of these came during the pandemic, by the way. So after the initial squeeze of debt markets globally, the first ones to surge were the green bonds, and then all the other ones came into the fore, because I think what issuers and what investors and what governments realized was that it was extremely critical to see the transparency of the flow of money, that what you are raising is what you are actually deploying it to. Okay, let's quickly move to other, next slide, please. Yeah, and you will see that this is all that gets included under these labels. Huh? And there is an interesting label over here, which I will take a little bit, spend a couple of minutes on, which is the SLB and the transition. Like I said, that it is not pure play green. These are not green assets, but this is a huge swath of our economy, which is right now perhaps doesn't have the technology at economically viable price points where they can already say that they are green now. Huh? So it's very much a brown set of activities. Huh? So and this is what is generally being referred to as transition now. And like you said, green bond, sustainability, social bond, there is also an SLB, which is called sustainability linked bonds. And let's just move to the next slide, and I'll explain the difference between green bonds and SLB, etc. Now, green bonds, why they became so important and attractive were that because there was simplicity of structure. It's a simple bond which has a green feature. What is that green feature? It's transparency. Transparency and criteria. If you emit below a certain threshold, are green, and if you emit above a certain threshold, carbon dioxide equivalent, okay, then you're not green, or you're not so green. There can be, some people follow a shades of green approach, dark green, light green, etc., etc. But the easiest way to actually reduce any kind of greenwashing is keeping it binary, that you have a sort of a strict threshold, which is scientifically, derived at. And then you say that, okay, if you're below this, you're green. If you're above this, then you're not, okay? And these things are not static. I mean, things move in terms of technology. They move, the laws and the policies, they make also a difference on, how progressive is R&D, etc. So you will see that something which had a larger sort of a threshold starts becoming tighter and tighter and tighter, because that's where we want to reach in terms of our Paris goals, right? That's where we want to actually have impact. So it's the use of proceeds idea in green bonds, which was just simple. Earmark your mobilization and deployment on the credibly verified green assets. That's green bonds, okay? Let's move to the next ones. And you would say that, the most of the bond financing is, can we just move to just press because then the rest of the picture will come. Yeah. So you will say that, the initial part was usually the projects, which is sort of the riskier part. Vasavi, I'll come to all of these very pertinent questions that you're raising, and the short answer is yes, in terms of certification. So you have the riskier part where there is bank financing and there is, equity, etc. And it is, you use these green bonds largely because the market is so new to refinance. So you can recycle your debt, okay? You refinance, you get better terms in the market, preferential terms. You just look at, if you're a financial institution, you just tag those loans, bundle those loans, recycle, offload your balance sheet. And same thing in the same way, even each of the, corporate sector people can do. And that is what has been happening. Even the governments are doing the same thing, actually, when they tag their expenditures on their budget and they say, okay, this much at least I'm recycling, and this is my new expenditure that I want to raise finance for. Okay, so let's go to the next one. Yeah. So you asked the question, what is SLB? And it is important. There are many instruments. This is not only green bonds. I don't know whether you've heard anything about masala bonds and green masala bonds. So the idea is very simple. The idea is that we do, have a currency exchange risk. If we as an emerging economy, which is already associated with high risk premia, issue in USD, then masala is everywhere. Yes, Mamta. So masala was a very interesting concept. Basically, IFC started naming, using this kind of nomenclature. They made dim sum bonds for China, etc. I mean, I don't know whether it is racist or not, but it is definitely very easy to sort of say. And masala says that, I will issue my bond in my local currency. What does that mean? It means that the any kind of fluctuation in currency value is actually that risk is borne by the investors. So I, as an issuer, is safer. Okay, so and RBI had clear guidelines about it, but you really, for any kind of international investor getting attracted to your project, you have to be a certain size. Okay, you have to be, the benchmark issuances in these bond markets are around $400-500 million. It's not that the smaller size deals don't exist, but actually just, how international investors simply just have sort of a thumb rule that below 200 million, they will not even look at emerging market, bonds. So, I mean, already they have this high risk, perceived risk, and then they just want to sort of, cut their losses basically. Okay, so NTPC, IRADA, these guys issued green masala in 2017. There haven't been much issuances, but there is a huge scope. I mean, the Indian green sovereign bond can be a green masala bond. It is INR denominated. Coming to this extremely interesting space called SLB, and then, I think we will stop and let's just attend to some of the questions over here. Then we will go to the next kind of discussion. Now, SLB is called sustainability linked. Why? Why did we need an SLB? I mean, you could say that green bonds could not really serve the purpose of the industry, and perhaps yes. And so what is SLB is, I don't have green assets. I can't refinance. I have a dirty technology right now, but I want to be on that journey of greening myself. So it's a general purpose bond. Why? And when you issue this bond, what you do as a company is that you set sustainability targets, that you will reduce your scope 1 emissions, scope 2 emissions, scope 3 emissions by a certain degree. And then if you achieve those targets, then your coupon rate, there's a step down, so you pay less. And if you are not able to achieve those targets, then you pay more and your coupon is stepped up. Okay. Now there is a huge, I think in 2 years' time, it's around $200 billion. No, not in 2 years' time. In 4 years' time, it is $200 billion globally. In India, there are around 6 to 7 issuances already. JSW Steel has done it, Ultratech Cement has done it, more and more, these big corporates are doing it, and their size will always be big. So it is the flexibility that it provides is very interesting for such companies which are right now in a brown category and want to green themselves. But there are problems. How do you decide that it is credible? How do you decide that target that it is set, that it is actually best of the sector, and not just, you know, some target that you wanted to set as a company? Just give me a moment. My cat is actually knocking. Just give me a moment, please. Yes. Sorry, working from home, so you have different kinds of colleagues, okay? Yeah, so the credibility is a huge issue. Greenwashing is a huge issue, and SLBs have found themselves in a hotspot, okay? I think a couple of issuances out of India have already been, there are too many watchdogs. Some of their guarantors were coal companies, so there has been, you know, a red flag raised. The recent issuance by Ultratech Cement has been picked up by international press for many, many reasons, and you could be on either side of the argument. But the idea is that it needs to be credible. Now, what Climate Bonds does is this, that it gives out the credibility criteria. Okay, so it's like recently released the certification criteria for SLBs. So, you know, one has to understand that principles will be broad categories, and there are principles. We have SEBI principles on green bond issuance. There are International Capital Market Association principles on green bonds. And then there are standards. Standards are specific, granular. They reduce the arbitrariness against which you can certify. Okay, so transition bonds and SLBs cater to the same zone where you're talking about brown to green transition, but transition bonds are slightly different. They are much less in number right now globally, but this is use of proceeds. I mean, there is still much more specificity in transition bonds. So let me stop here. Let's just see what the next slide is, and then we will go into the maybe we can have a little bit of a discussion over here. Yeah. Oh, wow. So I'm already on this. So the chat box, let me just see. Any project on climate mitigation with methane avoidance project got eligible for green bonds? This is something, wow. Okay. This is one question. Are there certification standards? I just answered. What is SLB? I just answered. How can the startup financing ecosystem bridge the green finance gap? Very good question. Is private finances available for adaptation and scaling up? Okay, so let's take some of these very relevant question. Methane is definitely a problem area. I mean, it's not only carbon dioxide, it is CH4. CH4, should I stop? Is somebody trying to say something?
Can people mute unless they want to speak?
Yeah. So, super important question, Mamta. So methane is looked at as everything is measured. CO2 is taken as not only the real, but also the proxy for other GHGs, okay? We do not yet have CH4 oriented bond out, but in Latin America, for example, in agriculture, when you talk about transition, any kind of transition will include CH4 emissions also. So there in that, and there agriculture in Latin America is a large enterprise, right? There are large farms, there are large corporate sector, there are small farmers also, but most of it is driven by large sort of farming practices. And with the return of Lula in Brazil, by the way, his one of the election pitches that he gave was that he will reverse the anti-environment and pro-deforestation of Amazon kind of policy that Bolsonaro was following. And one of the things there is that how the agriculture, which is actually increasing in productivity and is wanting to be green, most of the gains in that agriculture were being offset or dampened by the deforestation that has occurred in the Amazon. So CH4 has become very prominent, where agriculture is becoming, that frontier sector where greening is happening. Now, in the Indian case, we look at agriculture slightly differently. The entry point is slightly different simply because 86% of our farmers are poor in, small scale farmers, and there is distress. It's a sector under distress, debt burden, etc. So until there are other factors also, it's fragmented, etc., but you can't burden the farmer. And the per capita emissions, again, because the farm sizes are so small, that our per farm emissions will be very, very low. So the entry point there is resilience, that you improve your farm practices, you improve the logistics of farming, you do the value chain kind of interventions, and so you could be a corporate off-taker and create a demand for more sort of organic or sustainable practices. So their resilience and adaptation is more an entry point in India case, and it has a knock-on effect on mitigation, but it's only the way that you're entering a certain sector. Okay. Then I hope I have been able to answer that question. Are there certification standards? Yes, climate bond standards are in fact the certification standard. There are other second party opinion available in the market, which are just short of certification simply because they are not as granular, they're not standards. They will give you a second party opinion on the basis of principles that you're following. And we will come to, what are the pros and cons of a principle based approach and a standard based approach / granular thresholds. Then we have one more: any likelihood of developed countries pitching in with expected contributions after COP27? So your guess is as good as mine. It becomes, the more things change, the more they remain the same. But I have to say that US saying that loss and damage is something that is on the table, that it is now on the agenda. The Prime Minister of Barbados, Mia Mottley, really said that there needs to be a separate fund for loss and damage, and AKA reparations by the developed countries for the damage that the climate change is wreaking on developing, and especially the small, low income countries. What will they do in terms of increasing the private flows is an extremely good question, and I will come to that. Okay, so then we go to the next one, and this is where we start talking about how do you increase private finance and what are the constraints. One, domestic market I don't think any one of you has heard that your institutional investor is asking you how green you are. I'm sure you haven't had that demand from your investors yet. So what I'm trying to say is that there is really no market differentiation right now. There isn't that awareness. And so there is a lack of domestic market demand. And can we just move to the next slide so I can just take that in a little bit more detail? And there is high cost of capital within the country. So let's go to the next slide where we have a couple of details over here. So where is this demand coming from? It is definitely investor led. And where are those investors? They are outside of this country. They are offshore investors. Okay, because there are dedicated green capital pools over there, like I mentioned earlier. Domestic investors don't give you any advantage over, between green, gray, brown, any color you are, it's okay with them. And there is a lack of mandates for green investment by our own pension funds and insurance funds. And, so that is a big market barrier because there is no demand in the market, right? Then I talked to you about the ticket size if you're trying to go into the foreign capital market. However, I have to say and mentioned that there are some very small deals, $50 million and even lesser than that, which have gone to international investors and have found, second-tier investors looking for good green projects in India, and they're also listed on international stock exchanges like Luxembourg, etc. So it isn't as if things are not there, but the norm is bigger the deal, you will attract those international investors. So you need large size, huh? And to some extent, so much of infrastructure is going to get built. I think even if it is not 300, 400 for every issuance, if it is even 200, 300 or whatever, you need that kind of money. You need that kind of raising of capital. So the idea is, wherever there is large project, please use the debt capital markets, because there are people, there are investors waiting for those pipelines to get invested into. Very important, when I talk about pipelines, those pipelines are not visible. So you have to create pipelines, you have to showcase those pipelines. One of the initial steps is to define what is a green pipeline, green investment. And if that is not clear, you basically suffer out, because you may be green, but you're not able to define it in a way that the world is recognizing green. So in that sense, taxonomy of green is extremely important, so that you can actually, even the first step you start doing. I mean, of course, nobody's going to invest in you if you're not commercially viable, but to be able to say if you're green, you need to have clear definitions. Okay. Can we just move to the next one? And this, most of you will know better than I do. You know that the cost of INR debt finance is quite high, and it is unlike you will see in developed markets, capital markets. However, multilateral development banks, when they sort of become a conduit in terms of taking that international private money to emerging markets, then they can be extremely interesting conduit, because the way at the rate they lend can be as low as 4%. I mean, because they are multilateral development banks. So development is really the core function. And then I think the hedging costs also add to your total cost of capital. So if you're borrowing from in USD, then you have to have that hedging cost built in for the entire currency exposure, hedged over the entire whole duration. So there are regulations on that. So it does become, in all, it becomes expensive. But within this sort of an expensive thing, when you're actually drawing in international investors, because you have diversified your investor pool, you still land at preferential terms. That diversification of investor pool is a huge sort of a benefit for issuers, because it diversifies risk, and it also makes pricing tighter. I mean, in all of those bonds, which are ideally certified green, but even externally verified second opinion green usually have better terms of reference. They land at better terms of reference. Okay. So yes, we do need de-risking mechanisms as much as possible. We do need credit enhancement of many of the companies and bonds issued. We don't meet our country grade is bar 2, and some of the companies are AAA, as you would know, but not everybody. So we do need that credit enhancement to increase those ratings a couple of notches. And certification helps, by the way, on all of that. I mean, I'm not talking of the Indian evidence as such, because this statement that I just spoke is coming out of the evidence in the developed debt capital markets, where you can say that if the bond was certified, then at least a gain of 26 basis points, up to 26 basis points could be realized, which means that at least your rating went up by a couple of notches, but at least by 2 notches. So development finance institutions will play a big role in different sectors, and also what kind of a project you are. If you're a small project, you need to aggregate those projects. The development finance institutions can play a huge role in the MSME sector and agri sector, in the distributed renewable energy sector. So like I said, all sources of finance need to work together in order to make it really, accessible, affordable, and widely used source of financing. Let's move to the next one, please. Yeah, so let's stop over here. And I think let's just go to the chat box right now, and then I will see, if you want any other questions, any likelihood. And do these bonds also have some moratorium period if it is for a green project? What is the maximum tenor possible? Yes. So what do you mean by moratorium period? If you can just speak out, then I'll be able to respond better. How can the startup financing ecosystem? I will address it right just now. So, and the maximum tenor, actually, this is the difference between bond financing and bank financing, right? I mean, in bank financing, you'll have a short tenor anyway, which actually leads to an asset liability mismatch, okay? The debt capital markets could go for a long tenor, but the general tenor that we are looking at right now, where the bonds are issued, is 5 to 7 years. But you could go up to 10, you could go up to 20, 30, and you just need, I think, some kind of structures and supportive sort of tools to do that. Thailand, for example, as a sovereign, has issued a 50-year bond, and they just keep on renewing their sort of tranches within that large sort of time period. Opening their tranches, I mean. And so longer the duration, the higher the risk in a way. And so what we are seeing is more 5 to 7 to 10 years. And that's where your benchmark issuances are lying in that region. Startup financing. So startup financing can also look at getting green funds, but those we are seeing that in the startup is usually impact investors. They're becoming more conscious. You used to have only the social outcome as a primary criteria, but they're joining it up with environmental and climate. So entry point could be anything. And in fact, in just next week, we are doing this quite a workshop on agriculture finance. And I was talking to one of the impact investors today, and they said, we're talking about aggregated FPOs coming together, blended finance structures could be interesting for startup finance, where you combine some philanthropic capital or some kind of scheme that you take from the government or from a DFI, and then you just mix it with a little bit of initial private capital, but the coming together of it reduces the risk, makes the financing, makes the project sort of viable for a larger volume of financing through capital markets possible. So there are different ways in which you can use green financing instruments to finance startups. But again, in startups, usually the debt is not right now, that kind of a thing, unless it is an operation, which is, we are talking about unicorns, right? With countries increasing interest rates, is there pressure on interest rates? And yes. Yes, important question, and this is the market condition right now. There is around, green, non-green, there is around 50 billion worth of 50 billion USD worth of capital flight, which has already occurred from emerging market and developing economies. Okay, now this thing is I don't want, I want to say short-lived, but what I'm saying is, but the longer direction of travel is still very clear, even within these conditions. So in 21, green bonds were really, they were, I think, in 21, increase in volume as compared to 20 was nearly 40%. Okay. And then we're talking about green bonds and thematic bonds, including SLBs, okay? In 22, you are seeing a slowdown, and it is very natural, okay? And so when the entire debt capital market is damp, then it also dampens the green finance things. But only yesterday or 2 days ago, I think Moody's have come out with a report where they are already seeing signs of resilience and resurgence in the thematic debt market. So if this sort of interest hike by US, etc., and continues, and you would see the effects lasting till about third quarter of 23 minimum, hopefully not too elongated effects. So you will see that there is a, that ebb in the flow of finance, green finance, but from historical experience, the hope is that these thematic bonds, because of the transparency structure inbuilt in it and the massive push that is coming from policy and regulation, that these will pick up again. So there it is. And so now, yeah, so opportunities, let's go through this unless there are more questions over here. Okay, so let's just look at what's happening globally in India. I have covered some of these things, but let's go to the next slide, please. Yeah, I just told you, I mean, globally right now, the cumulative is stands at around $2 trillion already of GSS bonds. They are called green social sustainability bonds. Okay, SLBs are 200 billion, as I told you. And yeah, and the last point over here is important. Actually, even the one above that is very important. It is that investor demand continues to outstrip supply. So all of these green bonds, especially in the developed markets, where some data can be analyzed of benchmark issuances of vanilla and green at the same time, sort of, we are seeing greenium. We are seeing greenium because there are dedicated investor pools which are chasing very, very specific kinds of credible green projects. So the demand is high and supply is low, and hence that greenium persists. Okay, so this is what we have seen not only in the corporate side of things, but also in the sovereign issuances that are happening, especially in the developed markets. So there is greenium also. These kind of things you probably would have already heard, or maybe you will hear it with interest now since you're talking about it today. GFANZ. This was brought as a very big watershed moment last year at COP26. This was Glasgow Financial Alliance for Net Zero. So basically all segments of the financial ecosystem. You have banks, you have insurers, you have pension funds. They have made this alliance, and they have pledges based on scientific definitions of transitions, which means credible, which means that it is not like, okay, it is 2050 and I will just only incrementally reduce emissions, and there won't be a step change to the best of class in that sector, etc. So however, we know that most of this has again remained concentrated in Europe and developed world, and simply because because of the transfer risk, these private guys won't invest until there is some kind of absorption of first loss, or some kind of guarantee, or some kind of MDB intervention that happens. So they will go after familiar. RE is familiar, no problem. Okay. Anything new will be a problem. And as much as, even domestically, we see that, investors like to reduce risk. The flow of money is directly proportional to the level of risk perceived or real. So this is a bit of a problem, and not a bit of a problem, actually quite a massive problem, because the numbers, trillions of dollars are needed, and industry is transitioning. That pace of industry transition will also increase due to policy changes, and what you saw happen in 15 years time will get compressed now. So I would really love to also probably hear from you, from your industry experience, that how you are seeing some of these things becoming real for you, so I will be very interested in getting some perspective on that. So can we just move to the next slide, please? Like I told you, basically the issuers in India, and there are, quite a lot of them. It is also the market which is leading in certified issuances. The main thing is that, you get oversubscription of 2 to 3 times. It's become very normal. Upsizing is also normal of a bond volume. Main thing is access to wider pool. And we talked about this, and better risk management. And investors are the buy and hold investors. So these kind of bonds, they hold better value in times of market fluctuation. And there are, of course, systemic benefits. There is transparency. There is additional liquidity. There is a new class of investors. There's higher capital flows to long-term investment needs. And you basically, if you're transparent about it, then you are almost saying that the quality of asset or capital expenditure spent on, formation of that asset will be good, because that is the entire idea, that you have taken into account all the risks which were coming from environmental sources, climate emission sources, etc. So you have looked at the asset creation with a much more acute eye than you ever did, so you will invest in longer lasting, high quality assets, and not those assets which will become stranded. And there are signs that some of those assets are perhaps not going to be with you, or will have very depreciated value if the policies are changing that fast. Now, yes, we are coal dependent and we will need coal, but that the coal economics is actually outcompeted by RE economics. So people are changing their sources, and people are looking at hydrogen now. People are looking, it's still some time to go, but given our RE costs are so competitive and so low, you might actually see that the pace of cost reduction in green hydrogen will be faster. So things will move, in this direction. However, I'd love to hear your views and how you feel about it. So I have just named some of these guys, who have tapped the offshore market. There are now domestic bond issuances and certified issuances also. There was also always an argument that it is only the international investors which care for certification. Nothing really matters in the domestic market. But these are small issuances, 120 million worth, Avada and Vector Green. Both are domestic issuances, both are certified, and they really wanted to make that thing happen. And there will be more and more of this thing happen. Demonstration leads to a lot of cascade effect. Positive, also negative, but here in this sort of ecosystem, more the demonstration, more the learning, more the liquidity, sort of, it's better, it's a win-win situation. Can we move to the next slide, please? I think we're coming to an end. Yeah, I've told you about this. So let's move to the next slide, please. Again, novel financial instruments are there. So it is not only green assets, it's green InvITs. There is an issuance by an InvIT which is green. You can talk, there's REIT Embassy, which is in real estate sector. That is a green loan. There is, there is also now talks about PPP structures trying to get that. The idea is, how do you bring those projects to fore in identifiable manner, in a credible manner, so that you can actually tell the investors that these are green projects, and I want to come and seek that capital which is lying over there. So that visibility and from different kind of structures is also possible. And is beginning to happen. We are not there yet. I mean, 25 billion USD is the Indian issuance, green issuance, from 2015. And 40% of it happened in 2021, by the way. So it's very interesting how the surge happened. Let's move to the next one, please. Yeah, this is just a slide to tell you that states are looking at this. We are working, we are in conversations, there is interest, nothing is on like, okay, nobody's jumping at it at the state level, but simply because they don't know. So there is a lot of awareness gap. But why I put the slide over here is that a lot of capital expenditure in any of these sectors is going to happen at the state level. And state, by the way, will also not be able to do it everything by itself. So the private sector, even within state, is important, right? So things will start moving at that level also. And we are hoping that the Indian Green Sovereign Issuance puts that benchmark even for state governments to come out with state level green bonds, and they could also be done by a state-backed entity. I mean, none of the state governments are credit rated right now, right? It's only the central government. And if you are coming to the market, you will have to have a credit rating. So yeah, and let's move to the next slide, please. Yeah, so this is where we are. This is where the policy movement is happening. Let's just go to the next one. We do need clear definitions that reduces the arbitrariness, that reduces the transaction cost, that reduces the greenwashing risk. And Ministry of Finance had put, a sustainable finance task force. The Taxonomy Development Group, which I'm a member of, has been working on this, and it's awaiting release. And of course, we have to move to other sectors like biodiversity, circular economy, etc. Some of these criteria exist, some of these criteria do not exist, even in climate bonds taxonomy. I will just show you how that looks like. Can we move to the next slide, please? So this is what I just told you. Reserve Bank of India has come out with a paper for financial sector regulated entities that they have to start integrating climate risk into their stress testing models and their disclosures. This will become important. So the now, like as you were saying, that it is not only green, it is the transition aspect of it which is going to become important. So transition plans are getting built by some companies. They need to be credible, and so it's a new wave, so to speak, which is ahead of us. And let's move to the next one, please. So you will see more regulation than less. That's what I'm trying to say. The trend is more that there will be more policy action. There will be more regulatory action in the field of green finance. So it is good to know. It is good to prepare. It is good to tap the market where the opportunity lies. And let's go to the next slide, please. Yeah, and just a conceptual, just the one back. the one slide back. Yeah, it is a very sort of an classification for you to give you a flavor of financing green and what is greening finance. Financing green is all that we talked about, the mobilization of money, the deployment of money. Greening finance is all about policies, regulation, disclosures, etc., etc. And then, of course, there are cross-cutting themes. There's capacity development, which is hugely important, increasing use of technology and digitalization for financing sustainability, climate action. All of this is extremely important. Now let's come to the last slide. This is the green bond taxonomy. This is sort of a parent taxonomy. We started building clients done by climate bonds. We started putting the taxonomy and standards way back in 2013. China was to follow us in terms of a country level taxonomy. If you've heard, EU has come out with the taxonomy. It is mandatory. And so there is country level effort, government led effort, voluntary market-based instruments. All of that is there. And as you can see, there are different sectors which get covered within energy, transport. You will have all kinds of freight, rail, aviation. These circles where you see, the certification criteria is approved. You see that purple tick, criteria under development is orange and due to commence. And I think this is still one version older. We have released the criteria on steel, hydrogen, and cement, and SLBs. And entity level transitions. So this is also happening. And can we just move to the last slide? I think that's the last one. Yeah, the green sovereign bond, a huge thing to play. Now let's see how that goes. I know for a fact there is a news report right now, either today or tomorrow, there will be a green bond framework which will be issued. If it is robust, then India actually does something remarkably well. And China hasn't issued a green sovereign bond. There are about 30 countries which are in this exclusive club. And what India does makes a difference. So, and how neat and how robust it is, sovereign issuance will also mean something for the corporate private investors in India to tap the debt capital markets. The domestic one, it's a INR-denominated issuance, just like it should be. I mean, yeah, so that is it. The interesting bit with the sovereign issuances is that, the main thing in green bond is earmarking. So sovereigns, when they issue anything, when they raise money, for them it is fungible. That needs to be fungible. So how governments are looking at that is that they can't create a corporate different account. They really want their money to be fungible. So they make their reporting process very, very robust. They make everything transparent. The impact report is given, allocation report is given. So all of that is given. And yeah, so there we are. And I think the next slide says thank you. It does. You're inaudible.
Yeah, sorry. Thank you so very much. I think you have taken almost all the questions. Anything new appearing there? Okay. Only one point I wanted to know, are there options for SMEs?
So it's a very good question. So SMEs, and I am, I've worked with SIDBI and all of that. I think the SME field, simply because they're smaller entities, aggregation becomes a way to access. So can you aggregate? And I think you can. I mean, the large SMEs, they can access it. So that their ratings, their asset, their portfolio, and aggregation. I think that will be the key to be able to access debt capital markets. The other way to look at it is the other source is the bank finance. So if you would have, say, MSMEs already included in PSL, right? And if PSL uses a green definition also, then though that green activities can come through the PSL as well. So again, like I said, you need all sources to sort of, take this on. And also to have then those appropriately designed incentives.
Okay. So thank you very much. I think we have had a very information-packed and a colorful presentation on the green bonds. I will now request Mr. Venkatachalam Iyer, the former MD of Orient Green Power and currently an advisor to our Sustainable Chennai Forum, to give his concluding words. Venkat?
Yeah, thank you very much, Neha and the MCCI. This has come at a time when the COP27 is just going on, and what else? I mean, the biggest vitamin that is required is the vitamin M. Money is the biggest thing that can drive all this and drive us to achieve a net zero by 2050, 2070. And I would really say this, all these, the areas of green finance is making us all understand this, has been covered brilliantly by Neha. It gave a very good overview as to what's happening across various parts of green finance, the various aspects of it, from renewable energy to various other, from water, transport, and other things. And definitely it involves the corporates and individuals. Each one of us has to contribute to it, whether in terms of finance or otherwise. I think it's been beautifully covered. And what I really admire is that you've been taking questions in the middle of the presentation, going through it. As and when it became relevant, you said, yeah, let me cover this also. This is something which I really appreciate and admire. Now, I'm sure Delhi definitely requires people like you to carry this whole initiative forward. Thank you so much, Neha Kumar.
Thank you so much. And not only Delhi, India needs it.
Yeah.
So we all need to work together, hand in hand.
That's right. Yes.
Yes.
Absolutely.
Thank you so much.
Thank you. Probably we should meet soon here in Chennai. We would like to invite you in person,
Absolutely. With
hopefully,
your pleasure.
maybe in the next few weeks.
Absolutely.
Thank you. Thank you
Thank
so
you.
much.
Thank you.
Thanks.
Okay, bye.
Good day.